Hi there. My name's Brian Pombo, and I appreciate you taking a look at what we're putting together here and what we're going to be doing here. I'm a business investor, and one thing I've been watching through the years is my own father going through and becoming a real estate investor, doing really well with it, and learning about the different parts of that business have been really intriguing to me. And one of the areas that's most interesting is called private money lending, and he's had the ability as a real estate investor to be able to work with people who have done private money lending previously. They're veterans of it, and people who are brand new at it. And so I wanted to take a moment to kind of ask him a few questions regarding private money lending. His name's Ralph Pombo. Dad, are you there?
Yes, I am here.
Good deal.
Thank you,
Okay,
Brian.
you're welcome. We're gonna just start out with just the real basics here, regardless of where you're coming from. Those of you who are watching, we want to cover all the bases. So we're going to start at just the very first idea, which is what is a private money lender, and sometimes it's reduced to PML. So what is a PML?
Well, just to start out with, I just wanted to let everybody know I'm not a financial professional. So any ideas that you have or anything that I am sharing, it's just my opinion. And please follow up with a professional in the industry just so that you don't make any mistakes and so that I don't lead you the wrong direction. Okay, so what is a private money lender? Private money lender can be anyone. Just to put it as simple as possible, it's one person loaning money to another person. And it could be a relative, it could be a friend, it could be someone that you've never met before. And it's just a handshake and a smile. And they're loaning money to you to be repaid at a future date. And it's just that simple.
Very good. So there's a lot of different types of lending out there. One of the ones that people hear about is hard money lending. How is a hard money lender different from a private money lender?
So typically, hard money lender, an HML, is typically a business, and they are restricted by government. They are restricted by local and state government, and they can only charge a specific amount, and they can only there's a lot of rules and regulations to hard money lending. Whereas a private money lender, there's very, very few rules. It's an agreement between two people. And so, even though both of them are typically short term loans, the hard money is flexible. It's a lot more flexible than a conventional loan, but it's easier to be approved for it, but it's still short term, and you still have your asset is at risk. Hard money means it's a hard asset, has to be connected to it, and that is the collateral for the loan is a hard asset. That could be a house, that could be a car, that could be a boat. That is the hard asset that they will take away from you if you don't pay your bills. So it's just that easy.
Okay, so what does the private money lending process look like?
So it can be it's variable. So it could be something as easy as Uncle Jim says, I'll loan you money for a car. And he gives you $1,000. You go buy a car and you make payments to Uncle Jim. It could be that simple. Or it could be a large loan between two people for, let's say, real estate. And there's a house, and we need $100,000 for a rehab on the house. And a person that I met and made a relationship with is going to loan me $100,000 for a certain interest rate, and I make payments back, or I pay everything back when I sell the house. So it's all up to the two individuals how it is secured, how what the returns are, everything involved in it can be constructed at the time that people make the agreement.
Okay, so if you could list out some of the pros, what are the pros with private money lending?
Well, private money lending is, like I said, there's no regulation, so you make your own deal. And so it's an agreement between two people, making it very easy. You don't have to have good credit. It doesn't count against your credit. It's just an agreement between two people. So it is very good for rehab loans. It could be good for bridge loans. Let's say that you're borrowing money between loans, like a one as you're purchasing, but you haven't gotten final financing yet, or it's very fluid. You can do just about anything with it. That's one of the benefits of it.
Great. On the flip side, what are some of the cons with private money lending?
Well, there could be lots of cons. That's the problem. You are going into a partnership with the person, whether you like it or not. And if Uncle Jim decides that he doesn't like you anymore, and now what's going to happen to this loan between you and Uncle Jim? And what's going to happen to your future relationship? That it's the same thing with anything. It's almost a marriage with this other person, and that's one of the problems, is the relationship itself is at jeopardy. Another problem could be it's the private money lending is usually very short term. Could be a couple of weeks, could be a couple of months, 6 months, but usually not more than 6 or 9 months. And that's the length of the whole loan, because this is a person's money. They want to get paid back, and they want to get a return on the money. And so it's typically not a long-term loan. So that's another problem. There's the fees are higher. Uh, the private money lender is going to get paid higher than a hard money lender or a conventional loan. So it depends on your use for the money.
Got it. Okay, so that makes a lot of sense, and you've told me different situations that you've been through. What are some good examples of private money lending?
So just to take one example, I do a lot of fix and flips. So I buy a house, I fix it up, and I resell it. So in my world, I would use a private money lender to cover expenses during the flip process. I get a hard money loan for the purchase, usually 80 to 85% of the purchase and rehab costs. And then as I'm rehabbing the home, we're taking draws from that loan, from the hard money loan. The private money lender would give me enough money to cover all of my expenses other than the purchase and the rehab. So the closing costs, the let's say electricity, water, maybe HOA, or any payments that need to be made. The private money, in my case, would go toward those things and then be paid off at the end when I sell the house. So that's a good example of how I would use it.
Great. So that you've kind of given us some idea of who would be good at being a private money lender, but who would not be good at it.
If you can't afford the risk, then you probably should not be loaning money to somebody. It's a lot of money. It's high risk because it's you can document as much as possible, but you are still taking a risk with the person on the other end. For you're the lender, I'm the borrower. You're taking a big risk, and if you don't know me, if you haven't built a relationship, you should not be loaning to me. You need to understand who I am and what I'm using the money for. So just understand that anytime you risk money, there's a chance of losing it.
Okay. Makes sense. If someone were looking, after hearing everything you said here, someone were looking to possibly become a private money lender, what would you say the steps are to do that?
Well, if you really have some questions and do a little bit of research, but you can always reach out to me. I will help you out. I would love to have you as a private money lender um, if we can find out if we work well together and just make sure that both of us are getting what we need out of the relationship.
The best way to connect with Ralph Pombo is below in the contact form. Fill that out and he'll get back to you. Great. That's all the questions I have. So yeah, get a hold of Ralph and please let us know if you're interested in moving forward or finding out more info.
Thank you very much.